Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center. This is a podcast dedicated to helping individuals that are owners and operators of bookkeeping, accounting, and tax businesses so that you can clearly and concisely offer quality services and get paid what you're worth. It's here in this show that we actually address and speak to the experts, those individuals that have insights as to how we can be doing things better, such as marketing, selling, pricing, staffing our services, training our employees, offering quality services, and so much more so that we can, in fact, build the premier accounting firm in our area. This week, we actually have an excellent guest, someone I've been looking forward to speaking with. This is Blog. He is the founder and CEO of Modeliks. It's a business planning and performance tracking software. Prior to Modeliks, he happens to have a 20-year experience in history in business planning, management reporting, and fundraising with Big Four firms such as Ernst & Young and a few multi-billion-dollar conglomerates. He obtained and invested over $400 million in funding for more than 100 different projects. So, Blog, welcome to the show.
It's great to be here, Roger.
This is going to be a wonderful discussion. One, because of your experience. I think funding is an amazing discussion, simply because as accounting professionals, we oftentimes find ourselves in situations trying to help our clients get the funding they need as they're growing their businesses, and whether they're starting or growing or perhaps even looking to exit. I think this always comes up as an item. So I'm excited to have that conversation with you. But before we do that, I want to get a little bit of your history. What got you into this space? What brought you to those 20 years of experience working with not only fundraising, but the accounting?
Well, Roger, since I was a kid, actually, let me start from there. Since I was a kid, I had some connection with finance and with money, I guess. I remember my mom coming home when I was, I think, 5 or 6 years old. At that time, my mom and my dad would receive their salaries in cash, actually, and they would bring the salary home in cash, and I would be the first one to say, okay, I need to count your salaries to make sure that you got the right salary. So they give me that money, I count it for you, I said, okay, this is the right salary, thank you very much. And that's how I think it all started, my connection with finance, with finance and money. And then my history, my mom, she has been a CFO for large companies most of her life, I guess. So she guided me, I guess, towards this in this direction. And I finished economics school, and my first job, it made sense for me to be a audit job in audit. My first job was with Ernst & Young in the audit team. I thought, look, for any type of business that you want to do, you need to understand finances. That's the start of everything, and then you're going to learn whatever you want to do. So I started with audit, moved around the world, and I can tell you a bit more about that later on. But moved around the world, and then got into consulting again with Ernst & Young, business planning and financial consulting with Ernst & Young. And that's how 20 years went by in that specific industry. And then about 2 years ago, I decided, I spent the last 13 years before Modeliks in Dubai, actually, working for Ernst & Young and for a couple of other conglomerates, and doing financial and business planning my whole life. And I realized that it's so difficult for many people to do financial planning because they either don't have the skills in Excel, it takes a long time to create a proper financial plan, a driver-based financial plan in Excel. So I thought, okay, let me simplify this process and allow consultants, accountants, even entrepreneurs to create truly professional financial plans with ease.
Well, first of all, your story there is tremendous, because I want to go back to the children, and then we're going to get into the financial planning. Being a child and being able to physically handle cash, I think, is phenomenal, because today, I don't think many people have a physical concept of what the reality of money is. I think it's such a disservice to our kids to have credit cards and debit cards, these small little wallets that we carry around, and we just, as a part of the transaction, do so many where we just either tap and pay, or we swipe and pay, we insert and pay. These types of things just gives the wrong impression, I feel, to the youth today, because like you, I used to handle cash. I remember having my money in piggy banks. I remember having cash in envelopes. I remember having cash in my wallet. And you had to be cost sensitive of, do I have enough for certain things? And yes, you could have it back at the house, but if you didn't physically carry it with you, you couldn't do things. So for you to be such a young boy being exposed to the salaries of your parents and counting it out, I could just imagine you having these stacks of bills just nicely organized to count this out and say, okay, yes, I can approve. You've gotten everything that you're owed. I mean, that's just an amazing experience. When you're looking at, as an adult now, looking back, do you see that as a different thing from today's experience with youth?
I completely agree with you, Roger. So for me, that was, you have certain amount of money. It's physical. If you want to buy something, you spend it and it's gone. And now you know the relationship with buying things and the amount of money that you have. You learn
Yes.
that. And you know that if you just spend them quickly, then after that, you don't have any more money. Now, because you asked me about the relationship, now I have a 5.5-year-old daughter. So now when I go into the store with her and she goes, "Oh, Daddy, buy me this." Now, I don't want to buy her every time, everything she wants. So I said, "Look, either we can buy this or it's unhealthy, or sometimes I don't have money." And she goes, "But just take out your credit card." I think it's horrible
Yes.
that she knows that there's this magical plastic thing that whenever you take it out, you can just buy whatever you want with it.
Yes.
It never ends.
Yeah, the card never goes away. You always still have the card.
It never goes away. So I agree with you completely. For me, it was very great experience to you see the consequence right away. You spend the money,
Yes.
the money is gone. And I've always been into saving. Now, not so lucky for me. I had an older sister. I have an older sister. She's 9 years older than me. And I would save my money. But because I loved her so much and she was older, she needed more money than me. She would come to me. She would say, "Oh, brother, can you lend me some money?" I was a nice boy. I would always lend to her. Sometimes she returns. Sometimes she doesn't return the money. but
That's another discussion.
But it was really I think it was a very helpful experience for me to be able to understand that causal effect between, you have money, you spend it, it's gone.
Well, clearly your opportunity to go into banking or investing didn't work out well, but you went into accounting, so that's fine. So that brings us to the financial forecasting. Before we get into your business and what it is, I want to talk about just the principles of forecasting. When it comes to planning, as accounting professionals, we spend a lot of our time in the historical. We're recording the transactions, but there's so much value in looking forward, and it's an integral part of my business. It's something I clearly do with my clients because I see that I feel that they have a need to see what the future looks like. When it comes to forecasting, why do you feel that it's so difficult for some to get an idea of how to do it? Why are they intimidated by it?
Here, I would say there are two reasons. One, because most of forecasting, even today, still happens in Excel. Yeah? And if you're gonna do a financial model in Excel, you need to first of all have a lot of experience and knowledge of Excel to connect all the formulas in the end to come to the profit and loss balance sheet, cash flow statement, and whatever other reports that you wanna show. But also, so you need the knowledge, but it takes a lot of time. That's the first thing. Just the pure knowledge that you need of Excel to do a truly professional financial model. But the second thing, which I think it's the more important thing, is that a really good financial model is based on the operational drivers of that specific business for which you're planning. It's not based on the accounts. It's revenue, and then you put a 5% growth on that, or 10% growth in that revenue, and then you look at your cost and you put a 5% growth. No, it shouldn't be built like that. It should be built based on the operating drivers of the specific business that we're talking about. And just so that I'm clear on what I'm saying, let's take an example of a specific business. Let's take a restaurant, right? How do you build a revenue projection for a restaurant? What are the drivers? Well, the drivers are the number of tables that this restaurant has, then how many times each table turns, how many different customers it gets per day or per month, and then multiplied by a average price per bill. Those are the drivers for a restaurant. If you're talking about an online business, you need to build. You're selling bikes online, let's say, right? You need to build that model based on, again, the relevant drivers, and those are, you have your number of visitors to your website. This is the driver, multiplied by a conversion rate from a visitor into a buyer. That takes you down to the number of clients, and then multiplied by an average price per client. You need to build your plan based on those operational drivers, because that allows you to truly one, set goals and targets for yourself and for your team. It helps you manage the business because the operational drivers are those that you actually have control over, that you can influence. And three, it lets you connect the whole model operationally. I guess you need to recreate your operational business into your financial model based on those operational drivers. And this is how you truly create a professional, useful financial plan that companies can use. And I think this requires a lot of knowledge of specific businesses and industries in order to build such a driver-based financial plan. And I think this is the difficulty. You need to know the business to do it.
I'm loving this answer. By the way, I didn't realize how excited I'd get about this. I'm very excited right now because I quite enjoy this conversation. So one of the things that I think is very important is your first emphasis on Excel. It's not the software. I mean, it's not just Excel. I mean, you use whatever platform, but it's the knowledge of numbers, math, and using some type of interface, let's say Excel for the lack of a better term, to where you know how to use math and the cells and the formulas to actually build the model. So I agree with you. If you don't have that as a skill set, it's hard to actually know how to begin because you're not going to do this on paper. So I definitely agree with that. The second thing, though, is where it really gets exciting for me. It's the cause and effect. It's the causal relationship between the numbers that is what you're looking for. It's the key performing indicators that you're watching, and those then have these correlating effects on all the other numbers. So if you increase one number, it's going to then impact these other 10 numbers accordingly. And you have to have the mathematical formulas to say, if this goes up 10%, how do these change? Well, this changes 2%, this changes 10%, this changes 60%. And there are percentage increases, and then there's actual increases, very, very specific dollar amount increases that happen, fixed amounts. Yeah. And so when you're working with these financial forecasting, I find it quite enjoyable. I can get quite lost in the formulas as you're trying to put together these models, because just like building a model airplane, a model car, this is something that's quite fun because you get to see, okay, if I just change this one number, how does it trickle through the entire program and change the formulas? And you can see how if I just hired one more employee, or in your case of the restaurant, if I just put 10 more tables in the restaurant, maybe I put them in an outside lobby, all of a sudden with my summer dining, I can add 10 tables. I can turn this many tables a month. I can get this many more average transactions a month. Therefore, I can have my increase in COGS because I need that much more inventory. I need that much more food, but I'm going to need 2 more servers. Well, I've got 2 more people on payroll now. Well, I've got 2 more people on payroll where I'm going to have to actually pay this much more in payroll taxes. Okay, well, now I've got the people that are serving. I've got the tables. Oh, well, I need now more plates. I need more cups. I need another washman to take care of the washing of the things. You can see how this just ripples through the entirety of the business. It wasn't just, I think I'd like to have a 10% growth next year. I'm just going to increase my prices 10%, and I'm going to have 10% more food. This is so much fun. So anyways, I'm getting excited about this. So let's go ahead and talk about the financial modeling as it relates to key performance indicators. How many do you feel are typically the minimum needed to kind of come up with the baseline for the business model? Do you have a rule of thumb, or is it just different by industry?
It is different by industry, but I would say it is usually between 10 and 25. This would be for me. For a very simple model, 10 is enough. For a simple business, simple model, 10 is enough. Up to 25 for a little bit more complex model. And I'm saying this based on the experience that I have with Modeliks. So I'll just be very brief around Modeliks. Yeah. One of the things that Modeliks does, one of the value propositions, is that we've developed financial model templates by industry. Yeah. So yes. any user, whether that's an accountant or it's an end user, it's a consultant, whoever it is, you come and you start and you say, okay, I need to build a plan for a restaurant, right? You start from a predefined financial model for a restaurant business, and all those KPIs are already predefined. That whole logic of that business is already built in. All those causal connections between revenues and costs, operationally, they're pre-built. And what I see from those models that I've personally built, most of them, together with my chief product officer, I see that it's somewhere between 10 and 25 KPIs that are really relevant. Anything more than that, it's just too much noise, I would say.
Yes. I agree. I typically work with about 10 to 25 in the forecasting models that I do. So I can relate to that. The other thing that I would like to ask is when I do forecasting, it's different than benchmarking. So when you're doing forecasting, you're in a position where you're dealing with hypotheticals, but the more you can attribute them to business norms, the more likely the model's going to work as you expect. Well, when you're doing benchmarking, benchmarking is looking historically at what are the industry norms. You're looking at, for example, NAICS codes, and you're finding based on those industries, here's what the norms are as it relates to P&Ls and balance sheets and the different financial ratios that exist in business. How do you take and bridge benchmarking and forecasting? Is there a correlation between the two?
Benchmarking is the integral part of the financial forecasting process, because you can build it. It's so important that you can build this amazing financial model based on all your operating drivers, all the logic that you've built into it. You put in your numbers inside, and then you're happy with your inputs. But if you don't benchmark those numbers, and actually you don't benchmark the main numbers, the model could throw out ridiculous numbers. Things like, oh, I have a net profit margin of 90%.
Yeah.
And you are, I'm a restaurant business and I have a net profit margin of 90%. Yeah, this doesn't work. You need to benchmark that number, right? You will see and benchmarking goes two ways. One, if you have, if you're an existing business, you always benchmark, still benchmarking for me at least. You still benchmark versus your previous numbers, previous years.
Yep.
And second, you benchmark, as you actually said, you benchmark with your with competitors and industry norms. And you need to benchmark. You cannot finish your financial plan without actually benchmarking it either against your actuals, previous years, or industry norms, because you could end up with ridiculous numbers. So they're very core. They don't forecasting and benchmarking are one part of the same process. They cannot live without each other.
I love this. With regards to your experience, how can accountants more efficiently and profitably offer this kind of a service? Because one of the things that I think accounting professionals struggle with is I'm great at doing the bookkeeping. I'm great at doing the accounting, analyzing the current financials. I'm great at doing the tax preparation, filing the returns. But how do I go into this advisory space and charge for, hey, let's forecast the next year, the next 3 years. Let's come up with cash flow needs of the business. Let's figure out how much capital we're needing for the company. I mean, how do you sell the business on this need for forecasting and get paid for the time? Because it takes time to actually learn the business model, identify the KPIs, and then start drawing those correlations to now have a model that the business owner can play with.
I mean, this is the exact reason why I started Modeliks. Yeah, to answer this question and to help, again, accountants, consultants, and even entrepreneurs, accountants in this case offer this service. How are they able to offer this service? Well, I would say, how should they do it? Well, because I'm the owner of Modeliks, I would say subscribe to Modeliks and you'll be able to do it instantly. And why is that? And why is that? Because what you get is, as I said, already predefined financial models by industry. It's not just offering the services, it's offering them profitably. Yeah, this is the important part.
Yes.
Because if you need to build a model from scratch for any business, you need, and I've built, I don't know how many hundreds of models in my life, in Excel mostly. Yeah? And it still takes a couple of weeks to build the model, to do a proper causal correlations between all the operating drivers. It takes weeks. Now that becomes expensive very quickly for the client. It depends how, what type of clients you have, but couple of weeks, 2-3 weeks of work of an accountant, it becomes quite expensive. So, and then you need to spend the time to start inputting data about your specific client. So it's an expensive service to offer. I did this for many years at EY. I was a director in the financial business planning sector, and it took us 3 to 4 weeks to just develop the financial model with an expert Excel guru, right? And that cost tens of thousands of dollars. Now, this is why it's difficult to sell this service to SMEs, yeah. But now, what Modeliks offers, and this is how I think you can do it, is that We offer you as an accountant a ready-made model for a specific industry. All the relationships between the cause and effect are already done. So you start with that model. For you, 80% of the job is done. Now you sit down with your client and you say, look, I've built the model, it's ready. Let's discuss whether we need to make some tweaks to this model to be 100% relevant for your business. If you need to do some tweaks, but that's 10, 20%, right? You've cut out 80, 90% of the work already. So you just tweak the model where it needs to be tweaked to be specifically right to that one specific client, and you're ready. So the time, you reduce the amount of time to produce the end result by 90%, by 80, 90%. And this is now how you can actually offer that service in a more effective way, which is cheaper for the client, but it's much more profitable for you because you don't need to spend 150 hours developing this. You need to spend 5 hours developing it.
Well, one of the things I like about what your business offers is the industry-specific templates. That's one of the things that I think is valuable. But before I go into those things, I do want to back up a little bit because my experience has been that for my clients, I'll spend anywhere between 4 to 8 hours building their model, and then I'm handing it to them to allow them to kind of manipulate the key performance indicators that then determine, okay, this is what they feel is going to happen. Therefore, this is the result based on the model. And generally speaking, it's not as robust as I would imagine yours were that you did for Ernst & Young. Mine, in 4 to 8 hours, I think were sufficient to what my clients were needing. The internal one that I do for our company, for Universal Accounting, however, takes me far longer. I'll dare say I spend nearly about 20 to 30 hours building the model for my management team before I give it to my management team for them to actually then do for their divisions of the company what it is they're going to actually declare for the new year. And those 30 or so hours that I'm putting in are me going into a lot of the nuances and trying to figure out what the correlations are. And it's fascinating to me. I enjoy the work. I quite like it. It's obviously my business, so I'm very vested in what's going to happen. But the point is that I want to get to this one question here. When I see the value of getting my clients excited about the new year, I see the value of the forecast. The forecast gets them out of the day-to-day operations of the business and excited again about the business as to where it could go, what they could do. And it gets them to dream a little bit bigger than, oh, I'll just do this month what I did last month. No, this month I'm going to hire somebody. This month I'm going to invest and buy something else. Why? Because I know if I do this and then I do this and then I do this, I'll be this much more profitable or I'll make this much more. So I get them excited about their business. When you're looking at the business owner, what are some of the wins that you feel they get out of the experience of working on a forecast?
Most of my clients are high growth companies, actually.
Yes.
This is at least from so far what I have. And what they get as when they do the financial model, they see how they get from, and usually these are five-year financial models.
Yeah.
They get from, let's say, a 2 million revenue in last year, they get to a 10, 15 million in 5 years from now. And this for them, and then they're able to, then I probe them and I say, look, can you justify such growth? Let me ask you on a couple of these KPIs. How did you come up with this? How are you going to grow from 2 million to 50 million? And then as I ask them, they think about the KPIs operationally, because these are operational KPIs. And they say, yes, I can actually do this, because they are able to connect the operations to the numbers. And then they see the numbers that they're at 50 million instead of 2 million. And this gets them excited about the potential that their business has. From the fact that they could be able to be a successful businessman. I mean, they're always successful businessmen, but much more successful. That they might be able to raise funds at a good valuation. That they are able to raise funds and that they're able to sell the business at a significantly higher value than what it's worth today. So these are usually the things that make their eyes sparkle.
What you're talking about is the second thing that I was going to ask, and I appreciate you bringing it up because you're right. A lot of times when forecasts are used, it's for capital, it's working with investors, it's helping others see why they should invest in the business and what is the end game. Because in so many growth companies, there's an exit that's within 3 to 5 years, and they're trying to say, okay, here's what's going to happen. So, from that perspective, what's an investor typically expecting to see in a model that one would create as part of the forecast? What are the essential elements that are needed in the forecast?
Yeah, it's again coming back to the logic of the operating drivers that they've put into the model, and the ability of the owner of the business to logically explain how they've come up with those inputs. Because if you just tell an investor, I'm going to get to 15 million revenue in 5 years, the first thing he's going to say is going to be, okay, fine, explain to me what are your KPIs that you will improve, how are those operational KPIs going to improve, which ones are they and how are they going to improve, and how can you defend that improvement. And you need to be able to explain the logic behind those inputs on the operational KPIs. They don't care about in my experience, they don't really care about what that number is in the end, that revenue number. I mean, they care. They want to see usually a big number, but they want to see that you understand how your operations are actually connected to your financials, and that you understand the main KPIs, and you understand exactly how you are able to improve those KPIs. The moment that they see that you understand your business, that's how they see that you understand your business. They see what are you looking at, what are you measuring, and based on that, they decide whether you understand your business. You know what you're supposed to measure. You know what you're supposed to manage. Because if you don't know what you're supposed to measure, you don't know what you're supposed to manage. And the chances of you actually reaching those 15 million revenue is much lower. So this is what they look for. They look for the logic behind the model, not the final numbers that the model spits out.
I love how you correlated the managing of the numbers to what it is they're measuring. That is hugely important. There's a quote out there that I use with my clients that what is measured improves. And that's simply because of the fact that if you're watching it and you're looking at it and you're recording it, you're able to see correlations and trends, and you're able to adapt and move. You're not caught off guard by things, and you have what are called leading indicators, and then you have lagging indicators. And the forecast is a way of saying, okay, if we hit certain metrics, these are the outcomes we anticipate. And that's hugely important to the investor. And I agree 100% with you. The more thorough your forecast is, the more belief or trust that the investor has that you understand the business model, all the associated expenses and costs, the KPIs, and they believe, well, clearly, if you've got all these numbers and you're able to watch and manage them and you can realistically achieve them, then I can expect that my investment's going to be worthwhile. So the forecast is clearly the best way to communicate this. So what other uses do you find that the forecast has? You've got the investors, you've got the bankers, you've got the business owner. What perspectives are we perhaps missing that would also be beneficial to having a forecast?
I mean, the one apart from those that you mentioned, I think the importance, the forecast is extremely important for the employees as well in the business, because when you do the forecast, you should use the numbers from that forecast to give targets to your employees based on that forecast.
Yes.
So as long as it creates so much transparency, because if you tell whoever it is, it's the head of marketing, right? Who you need to give a target on the number of leads that they generate, for example, right? You tell them, look, I'm giving you this number because this is your target, because this is the number that is going to have, if you achieve this number, this is the outcome, financial outcome that is going to create for a company. It creates full transparency, and it creates ability to set goals to employees, to whatever level of employees, depending how deep you go into your financial model, the more targets you can set at lower levels in the organization. So I think it's extremely important for the employee, apart from the entrepreneurs, for the bankers, for the investors, for the employees itself. It's amazing, because then that everyone sees that our targets every team has a different target, but they're all made that way. Those targets are set because they can clearly see how those targets are able to create the financial future for the company, for the company itself. So employees is number one. This is what I also do in my own business. I am very transparent about my financial forecast with all my employees because it helps them, understand why are the targets that are set for them that are set, and creates much more motivation than having a black box of how the financial plan looks like. So employees is a big one. I think if anything else, investors, we said, again, stakeholders. When Modeliks itself is a startup company, right? We are new to the market from last year, and when I talk to clients, potential partners, I use my forecast to explain to them where are we going to, what is our plan, where are we going to get. We're not. My financial plan explains to them that I'm not here to just be one more financial planning tool. I am here. Modeliks is here to be the number one financial and business planning tool in the world in the next 5 to 10 years. And these are my numbers that I expect to get to in the next 1, 2, 3 years. So they can see, so that my partners can see the potential for being my partner. I am at a certain level now. I'm small at the moment, but this is my target. This is where I'm going to get to. And if you work with me, this is the part of the business that the amount of business that you can generate with me if you stick with me over the next 5 years. So again, using those financial plans to communicate with potential partners, business partners, is another use case.
I love it. I'm going to go back to your employee comment because I think this is hugely important. We teach what's called the STAR program. It's basically creating a culture of accountability. And that culture of accountability is built upon key metrics. Everyone in the organization needs to have key performance indicators as to whether or not they're doing their job. And when you can tie those directly to a forecast, and especially to management, say your department, your division is intended to do this, it gives great clarity, a wonderful purpose to what it is they're supposed to be doing. That clarity and purpose is a driving influence to whether or not they're going to be happy at their job. And one of the things that I think is very important in a business is the correlation, as you described it, of one employee or one department to another employee or another department, which is to say, how do they each influence one another and impact one another towards this common goal of growing the business? You can clearly say, I did my part. What have you done with your part? I needed to do this. I hit my metric. Did you hit your metric? That clarity and that transparency is hugely important to keep things, focused, keep people on the mark, and ultimately hitting the goals that were needed to be met. So I'm really liking how you're describing this. One of the things I want to do now is ask, clearly you started this company. You'd been doing this for so long. Why get the entrepreneurial bug? Why, with a young daughter, would you want to start a business? Why do this now?
If I'm 100% honest, I think I was a little bit naive about the amount of energy and time it will take from me.
Good answer. I take it.
But I did think that I would be able to manage both sides, and I am able to manage them to a certain degree, struggling a lot of the times. But I think it was the naivety in me. I think the main reason. But if you don't get yourself out of the comfort zone, you can't really grow. And things that when you need to do these two things in parallel, I just find a way how to do it. No, you're able to focus on the important things more so that you can have time with your family as well. And it just actually helps me be more focused, more productive in general in life.
Well, I'm going to say that I agree. A lot of the entrepreneurs I work with are naive. They don't realize a lot of the things needed to run the business until, I wouldn't say too late, but it does catch them off guard. But I'm going to replace it with another word. I think you're an optimist. I think a lot of entrepreneurs see so much potential and they see opportunity. And what they're looking at is, you know what? I can do this. And so they go in with that glass half full mentality of, all things being done after a good day's hard work, I think this is going to work out. And so I appreciate that. With all the entrepreneurs I interact with, I appreciate the optimism they bring to the business model. So that's wonderful. So the last question I have on this front is simply from an accounting perspective, for those that are not currently offering forecasting services, is this something that can easily be incorporated into the accounting firm as something they should be providing to each of their clients? And do you have any pricing suggestions as they may want to consider how they would position this with their clients?
Yeah, I think to answer the first part of the question, I think they should be able to offer these services, financial planning specifically services to their clients quite easily, especially with Modeliks. But then again, there is one more service I would add to it. It's not financial planning is one part of it. I would take that service and make it a little bit bigger. I would say they can offer fractional CFO type of service,
Love
which
it.
Which includes financial planning is one part, but the second part is actually management reporting. Now, because and what does that mean? Now that you've done the plan, you are also the accountant. You have the actual numbers. It should be quite easy for you to offer a service as comparing those actuals to the forecast and then reporting them to your client. And that's kind of for me the service that I'm thinking. That's the service that I'm trying to help accountants provide. And how do you do that? We talked about in terms of Modeliks. We talked about financial model templates, and then you build the model for your client. Then your actuals start coming in. Now, when you report, currently the way it's usually set up with most accounting firms that I speak to, you would just send the reports on monthly basis. You'd send P&L, balance sheet, cash flow statement to your client. If there are specific other reports that you have agreed to provide to them for the actuals, you provide those reports. But those numbers now the numbers themselves, not always the reader of those numbers understands the meaning of the numbers and why the numbers look like they do. For example, if you had a forecast which said you're going to generate 1 million revenue, but you actually generated 1.5 million revenue in this period of time, you should be able to explain in a proper management reporting, you should be explaining the reasons behind those numbers. And when you have a driver-based financial model and your actual results, you can say, oh, you know what? We were actually able to generate that revenue because we were expecting to have whatever average ticket price to be whatever 1,000 per client, but it ended up being 1,500. This is the reason why. So that process of providing the reasons behind the numbers is the second part that I think is extremely valuable for clients that accountants should be able to do for them, apart from financial planning.
I'm loving this because one of the things that I emphasize is the need for accounting firms to offer CFO and advisory services, and how you've been able to just there articulate how the forecasting lends so well into that CFO and advisory space. The forecasting is a process, but it's typically a singular activity that's done, but it's then used over the next year or 2 or 3. And this is something that I think is hugely important. Even though it's a single activity that you can be charging for, it's meant to be an ongoing relationship that you then have with the client as you then compare actuals to forecast. That budget is something that is essential in running the company, but it's only essential if it's then used. And so That's one of the things that we've got to actually emphasize here. So I that right there is I think the pinnacle of it all. So thank you for that. So here's what I'm going to do. I'm going to kind of wrap this up. This has been a great conversation, lots of insights. I just love the topic. So here's what I'm going to do. I'm going to wrap a few things up, and then I'm going to come back to you for a closing thought. As it relates to my listeners, I've got a few things here. First of all, as an offer, typical to this, we have for our listeners a number of free offers that you can take advantage of having listened to this episode, one of which I want to bring to your attention that will appear in the episode description. There you can go get a book that is called Your Strategic Accountant and another called Your Profit and Growth Expert. The first actually introduces what it is that you should be offering that are the 3 core services your clients need from you as an accounting professional to best meet their needs as they're running their business. These three things are essential that I feel that whether you're providing these services or you're collaborating with other accounting professionals, these are the three core things that every business needs from the accounting profession. You should know them. You should be able to speak to them. The second happens to be your profit and growth expert. It is speaking to exactly what we're addressing here, your opportunity to move into the advisory space and offer CFO and advisory services. How do you actually become that profit and growth expert? How do you actually take the business from the reverse or historical looking perspective to looking forward in their business and actually have a proactive involvement with your clients, one that they relate to, one that they appreciate and value. They pay you for it. So definitely go to the episode description and get a copy of each of these two books for you to read and understand how you can now grow your business, offer quality accounting services, and become the premier accounting firm in your area. Now, as a summary, I think this conversation's been amazing. One, I love Blog sharing his youth as he counted money, just that understanding of how we relate to cash and that money relationship that I think the world today lacks simply because we've gone to such a credit-driven society and use so much the plastic that we have in our pockets instead of physical cash. Just being able to buy something and see the transaction of you giving something over in exchange for something is a lost thing that I think is very much helping for people to go in debt as much as they are. So that's one thing. The second that I really liked was this conversation about forecasting. One, the value in it, the skills needed, the understanding of how to actually work with the financials and come up with the numbers, the skills needed as it relates to identifying the 10 to 25 metrics, the key indicators that you're going to use to build the model. And then clearly it's the time being spent to build that model as it relates and correlates the various numbers within the business. That business model understanding is hugely valuable. The next thing I thought was very important is identifying who benefits from this. It's clearly the business owner. They get excited about what's going on in their business. They have something to look forward to, work towards. They can actually kind of motivate themselves, push themselves outside of their comfort zone because they can see what changes could lead to great returns. But also at the same time, you've got those that are perhaps bringing capital to the business. It's the investors. They need to see various things within that forecasting model that ensures the business owner knows what they're doing, that they understand the business itself. And the more clear that forecast can be, the more likely they're going to get the investments they're looking for. So I thought that perspective was hugely valuable. But then the last thing that we were speaking to is to employees. The more you're able to clearly identify the key elements of your business, the key performance indicators, and what it is that you can be delegating and expecting from your employees is hugely important to whether or not you're going to ultimately achieve what's been forecast. So wonderful conversation about each of these things, especially as it relates to forecasting. So great discussion today. So Vlog, what would you add to this?
No, I think we've covered a lot of ground today. What I would say is that for accountants, they really should not be afraid to go into offering these additional services. Fractional CFO services, because they have the knowledge, they have the data, they just need the tools and a bit of drive to actually go into the market and start offering the services. And these services, at least based on my experience, are higher margin, higher value services for their company. So do not prolong the push into new value added services. Go ahead and start doing it right away.
I love it. I love it. And definitely go and find out more about this Modeliks platform and service, simply because it will enable you to more confidently offer these services and provide quality financial reports to your clients. That's definitely something that you want to do. So in the episode description, go there now and find out more about Blog and this new service, Modeliks, that you can take advantage of to confidently go out there and offer this quality service as a financial planner doing as a financial service offering the forecasting that you can as an accounting professional should. The other thing that I want to do is definitely invite you as a listener, if you haven't already, to subscribe. You need to actually subscribe and get those notifications each and every week as we release new episodes, ones that you need to be hearing as it relates to working on and building your business. Now, as it relates to the past episodes, you can go to universalaccounting.com and in the navigation find our past episodes. These are highlights that we've put together of the more than 200 episodes that we've recorded so far with various experts on specific topics that you can actually binge listen to. You can find highlight playlists that are, say, marketing, pricing, tech stacks, staffing, onboarding services, just a variety of topics that are playlists you can binge listen and definitely go deep into as it applies to your company and your current situation. So go to universalaccounting.com and find those playlists for you to binge listen. The other thing that I want to do is invite you to GrowCon. GrowCon happens to be an annual conference for owners of bookkeeping, accounting, and tax businesses. As a conference, it's where we gather together to hear from the stage those experts that have the various things we need to be working on today as it relates to our business. In regards to GrowCon, I want to also point out the value of meeting with your peers. It's here that you get to meet those individuals that are doing like you, running successful businesses, collaborate with them, learn from them, and see what it is that they're doing that helps you actually then go back to your office and do the things you need to make this year the best year ever in your company. And then lastly, it's meeting the staff at Universal Accounting. It's those individuals that are committed to helping you work on your business, but not be in your business without being supported. It allows you to actually have the support of Universal Accounting Center to enable you to, in fact, build the premier accounting firm in your area. And then lastly, with regards to these principles and others that we've discussed, feel free to give us a phone call if you'd like to discuss how you can implement them in your company and find out more how you can actually confidently provide these kinds of services. You can call us at 801-265-3777, or you can visit us at universalaccountingschool.com. Always remember this, accounting success is universal. Do take care, be safe out there, and always have a great day.